So I'm Ben Quaintrell. I have a business called My Property Box in England, UK.
How are you, man? I'm Kris Kraze Mullins. Kris Kraze is the brand, K-R-I-S, K-R-A-Z-E. We deal with business. We have some real estate in there, but more so on the communication side, confidence side for business owners, founders, and entrepreneurs.
Awesome. Mm-hmm. So if I wanted to invest in the US for property, and I know that's a question of like, there's all sorts of property strategies. What is a good entry point or a good sort of general investment for people watching from the UK that is a good bet in the US?
Yeah, depends on what the intent is for the money that's going to be invested. If you want to park money somewhere, commercial investment's good. Obviously, apartments, storage units do very well. In my opinion, and from my purview, everybody has different lenses. Obviously, the market has its own lens, but I think that storage units would be a good park right now.
Did you guys work on yields? So would you say that's a 10% yield, 5%, 15% return on investment? Is that how you sort of analyze a deal?
It could be. I know enough about deals to be involved in them. We've done a lot of EMD on deals, earnest money deposit, where we parked money in it, put money in, got the deal, ended up being on the GP team, taking that money back out when we got it back and put it in on the LP side. And so that's the commercial properties. But if you wanted to do something that's more of a churn and burn and actually make more money, had a team here which was active for you or you yourself, you could do fix and flips. Fix and flips are big, or ADUs, which is auxiliary dwelling unit. You know, you have a main house, you build something in the back, 1,200 square feet, 2,500 square feet, depending on the size. Some of them in California, you don't have the space, but that will end up, you rent that out, and that ends up paying for the whole property in the front or offset your mortgage.
So would you do like it? So we call this strategy in the UK BRR, buy, refurbish, refinance. But you would hold it afterwards. So you would buy a piece of land, you would do the development, then you would refinance, pull the money out, and keep the property. Is that obviously a strategy?
Yes, there's a strategy here with that as well. And ironic because, and these were ground up developments, or no, these were rehabs. These are rehabs. So that the strategy here, similar strategy, terminology may be different, but it is the same in a sense, because sometimes people, they're subject to here. You have subject to in your area as well?
Sorry?
Subject to. Subject to is generally, man, this could go so many directions, not with subject to, just in real estate. So subject to is somebody's about to foreclose on their house, and then you as the investor come in, and it's like when you see these signs on the side of the road that say cash for houses or sell your house fast.
We get them.
Yeah. And so what happens is you come in and you basically do a subject to the current contract, and you say, hey, I'll take over the payments on your mortgage. You keep the mortgage in your name. We move you out and do something else. Now we either sell that property to another business, or we fix it and we do something else with it, and then you end up making money on that.
That's a creative finance deal, isn't it? Yeah, we have a vendor finance, deferred consideration. It's interesting. And the same strategies will exist here that we do as well. Yeah.
What's interesting too is here on the BRR model, right?
BRR model,
Yeah. So here we call it the fix and flip BRR. And there's different terminology in that, you know, throwing lipstick on a pig or splash and dash, or
lipstick on a pig.
Lipstick on a pig. That's where you got a horrible house. Really, you know, it's say you want to get in and out, just throw some paint on it, you know, mow the grass, get the F out of there. So
we say if a property just needs a little bit of work, we would say it needs a tickle. Oh, that's a funny one. Yeah, tickle.
A little
tickle, man.
But the cool thing is on some of the loan programs out here, you can get an acquisition and construction loan, which could last a year. Different loans, different programs. Some of these could do up to 95% LTV or 100% LTV. But you have a certain amount of months to execute on the project. So when you're done, and I've seen people do this, they own the company that buys the house, they get the loan, they renovate the house, they fix it, then their own company that they also own as well, whether a holding company or other, they end up selling the house, and then they use that and they rent the house out down the road.
Same model as the UK.
Same model as it, just different ways to structure the deal, but it definitely works. There's people, I can't put a percentage on it. There's people that are making some good money on that.
What do you like to do? Which strategy do you specifically like to do? It works really well.
Yeah, so we're in a project right now. This may go many different ways, but it was in Boca Raton. It is in Boca. We were going to move to Boca for this project, but it was buy a $2 million house, just under $2 million, throw $1 million into it, and then we turn around and we sell it for $5 million. And it's a very unique area because it's like a Beverly Hills, but there's waterways in a lot of the areas there. So these houses are waterfront houses. People can park their boats, very luxurious. And ultimately, you have like a couple of houses that were built in the 70s or 80s, but they're worth maybe $1 or $2 million. And then you have a house that's sitting here that's like a $10 million house or a $5 million house. And it's weird because that house was one of these houses at the earlier time.
Wow.
Somebody came in and renovated it.
I see.
It takes a specific type of person. There was one in there that was really hitting it hard. The guy passed away since then with the construction company. There's other people that do it as well.
Okay.
We were going to do this on a grand scale, had high hopes and dreams. We had another project we were going to buy for $5 million on the waterfront, put $3 million into it, turn it into this massive project, try to sell it for $18 million. I mean, and realistically, we probably could have got 16 for it. Now, these are massive numbers. If somebody didn't want to get started on something like that at the time, they could easily do it on, certain houses in the Midwest that you find a house for $174,000 or something.
Okay. And what's your biggest headache? Is it finding the deal, or is it managing the contractors, or is it selling it at the end? Is it finding deals hard, or are they pretty all over the place?
Finding deals, everybody will have a different response on that. My response out of those things that you listed is definitely managing the contractors. Yeah, because they're loose cannons. The deals themselves are more of a static kind of situation. And I like looking at everything as ones or zeros. It's one thing or it's another, or it's a math equation. And people are the unknown variables. And unfortunately, that's what's ironic about this is I've seen people before that they come in, they get a good deal. The deal's great. They're going to crush it on it, and then they don't manage the contractors right. So there could be a management problem and there's a contractor problem. And then they end up, they didn't do any contingency plan. And then before you know it, they're literally trying to survive the deal and just get the deal done to get it off their plate. And then, in my opinion, that would be the worst thing in the world because then it takes the fun out of doing the whole thing in the first place.
Absolutely. No, that's exactly the same as you get dealing with contractors. Yeah, it can be difficult. Good. They start off good and reliable. They end up being expensive and unreliable at the end, don't they? Yeah, that's the same.
With the UK, I mean, what do you see as any different with the UK and with this market here? Terminology different?
Yeah, terminology is different. I'll tell you what, we've got one big thing in common: the housing shortage.
Yeah,
we've got a huge housing shortage in the UK at the moment. And one thing we have this that's been born out of accident because of the demand for properties is HMOs, so house multiple occupation. And what happens is these property investors, they buy, like say for example, a large townhouse in a town or city, and they turn it into a 6 or 8 bedroomed shared house. It's almost like a student property. You have en suites separated. Now, one of the key things is on this BRR I was talking about is. So when you refinance it, once you bought it for 150k and you spent 150k on it, so it stands you at 300k. If you're going to keep it and not sell it, when you refinance, the sweet spot is between 7 and 12 bedrooms. And what happens is when you refinance it, the refinance is based on the revenue in the building, not the bricks and mortar comparable to next door, whatever next door sold.
Wow.
So the refinance might be 450,000, and then you can pull out 75% loan to value, and then not only have you got this asset that's going to cash flow you, you then have 100k back out the deal, and then you can go again. And that's a very popular strategy, and it was born because we're short of houses. We haven't got enough houses.
Wow. What's interesting as you're telling that story is there's a strategy here where assisted living is big.
Yeah.
And so instead of putting somebody in an assisted living home, it's like, how do we bring the comfort and bring them to a home?
Yeah.
And so somebody will go in, they'll get maybe a 4 to 5, 6, possibly 7 bedroom house. Let's say 4 bedroom house. They really do up the common areas. They provide the internet, they provide dishwashing service or any other amenities. Obviously the landscape's done, pool's taken care of, whatever the case may be. And then they rent each room out for a premium price.
Similar.
So very similar. And I know this because I was looking at houses around my mom's house that were for sale. She's like, yeah, this house down the street, there's 8 or 10 cars in the driveway. I don't know what the hell's going on there. I'm like, I'll tell you exactly what's going on there.
Yeah, that's it. Yeah.
I'm like, it's not and it was in California, so it could be, no offense to the nationality, but Mexican families are big families, and they like having a lot of people live there. But this was not that. This was the way she described certain things. Definitely was one of these situations.
You guys had much capital growth then, as in the capital growth valuation, have they gone up over the last few years, or is it kind of?
It's kind of been stagnant. What's funny is, and I was talking about this earlier, it's ironic because as a marketer, I'm a marketer at heart. Okay. And so when coming into the commercial real estate space, it's always like, how many doors do you own? How much do you have under management? How many? And it's like, wait. I really only own like 1/5 of one door of the entire complex, but my team, we do the whole thing. And so so I always feel that there has to be that level of transparency, because like I'll have people come up to me, like, hey, how many doors do you own? It's like, dude, it's a vanity metric, man. Like But at the same time, we offloaded a lot of money, multiple hundreds of thousands into real estate a couple years ago. We've seen some returns on that. I knew that it was a hold strategy. Park the money there. We're not going to see any returns. The property values themselves have gone up a little bit. But one of those was a creative finance deal where it was a warehouse, 8,000, 10,000 square foot warehouse with 3 offices in the front, and it was a storage facility in Fort Pierce, Florida. I think, 180 units. And the owner was selling it. We went to the owner and said, hey, instead of us getting a loan and all of this problems, why don't you finance it? You get these payments, and then we keep the transactions clean. We do one transaction one way, you pay us rent for your warehouse the other way. Make sure the books are clean, the whole 9 yards, and it was great. Wow. He went for it. We did it. It was ironic because that one, we actually almost lost the deal. When we did the transfer, I'm sending money in, other people, because we did some EMD on our projects. We like doing earnest money. So we sent this money in. We finally get everything in. Then we get the loan. Things are happening. And we were like, I think it was like $20 short or something like that. Wow. And the guy's like, hey, man, you're technically $20 short. And our partner turns around and pulls out a $20 bill. I mean, it was a whole story in itself, right? That deal, actually, we got dividends paid out of that. We got some money back on that. I call them dividends. But the other deals that we've invested in, there has been not. It has been holding. I don't agree with some of the things that are happening on one of the deals. I'm in a mastermind with this Robert Martinez. He manages his own, I think, 12,000 units himself. And he's like, hey, it was ironic because he had a management company that a very well-known person that we both know, probably why we're in town here, also used. And this management company was managing all of Robert's properties. And Robert said, there's the problem here. Something is not right because costs keep going up and up and up. And being in his mastermind, he's just completely transparent with all the stuff. So he lets the management company goes in, and he's managed his own stuff before, starts managing his own stuff. And he goes, holy shit, they were just like the government is right now. They were hiding money in this that was paying for this, and so he went back to his guys. He goes, hey, if you guys want to be a maintenance guy, you want to do like 5 or 6 different jobs, the opportunity is here for you. Really restructured it. I mean, the amount of money, I don't know the figures exactly, but it was just phenomenal because we're going through on multiple calls, and I'm just like, holy shit. Just because at the end of the day, he said it like this. He goes, the management company is there to make money for themselves and to make sure that you're just as happy enough that you won't leave and go somewhere else. Yes. And you probably know this, yeah.
Yeah, absolutely, yeah. That's it. It's wow, I've never heard, wow, what a story, yeah.
Phenomenal. And it's ironic because it resonated with me because I'm involved, I'm a Six Sigma black belt, so process improvement. Okay. I don't know if Six Sigma's big, I'm sure it's worldwide. Yeah, I think so. But it's seeing that and working with Fortune 500 companies as a loss prevention detective at the corporate level, organized crime, fraud, shrink, the whole night. So looking at that, I'm just like, dude, I love that. And so ironic enough, at the same deal, we go back and we had, it was a B property, and we had an A management company that deals with like Class A type properties. They say, hey, we'll do you guys a favor. We'll manage your property. Okay. Here's our rate. And so you call them Class A, B, C over there as well?
Yes.
Yeah. Just making sure the terminology. Yeah. So we come in and the team starts talking and they say, hey, let's go ahead and we kind of want to automate this thing. And I'm like, okay, guys, we're going to be taking away one of their big 3 revenue generators for that company. Yeah. And so, but they're like, yeah, let's go ahead and do it anyways. And so, okay. And then so we ended up taking the marketing over as well. Cause I'm like, dude, as a marketing guy, I know they're doing the marketing wrong. They're running all the ads. Yeah. So I said, I guarantee that they're going to cancel us in 30 to 60 days. And the team's like, dude, you can't be so negative, blah, blah. And I said, it's planning ahead. We're taking away 3 of the revenue generators or 2 of the 3 revenue generators that they make their money on. This is going to happen. It's a math equation. Sure enough, 25 days later or so, they called us up, hey, we're going to let you guys go in a couple of weeks. It's not worth it anymore. And so then the hurricanes happen. And so, yeah, there's been a lot that's going on that property.
What's next then? No signs of slowing down. You're just going to keep
Yeah, we've reserved back a little bit because everybody is, you know, hey, you're going to make money. You're going to make money. I mean, it's all a marketing thing, right? Yeah. At the same time, we want the market to get a little bit better. Okay. So yeah, we pulled back on that, focused more on the online businesses, on growing some of our stuff. Founders Field Day, which is newsletter for founders, entrepreneurs, business owners, and then training. Yeah, training, consulting, awesome. Things like that. So yeah. What about you?
I have we do property management, My Property Box. Yeah. So we've got some VA venture capitalists have invested in us, the British Growth Fund. So we buy property management businesses. So it's called buy and build, as in we buy the business and roll it into our existing business. So that's not slowing down. So it's full steam ahead on that at the moment. The property developments myself, I've actually slowed down a bit on myself for the same reason you mentioned. Yeah. But we're full steam ahead on the business acquisitions at the moment. So we consolidate these property management companies, and we it's like hub and spoke model. So we centralise property management accounts, and then we manage these properties across the northeast of England, basically.
I like that. I was hearing you talk earlier about the hub and spoke thing. So yeah.
So it's a good model. And I was saying as well before, there's a lot of consolidation in the industry because of all this compliance coming in, all these sort of retirees are wanting to get out of the industry. There isn't a lot of money in managing a small property management company either, but there is for us because we roll it into our existing business. So the synergies kick in. You know, you only need, one centralized office and senior management team. So that's what we're focused on.
What's interesting with real estate, and we could probably end with this, or however they want to end. I see it as a business. Absolutely. It's a business, which it is. Everybody else say, hey, invest in real estate. But hey, this is a business that you can control all the levers. Absolutely. And the right people, the right things, the right marketing, the right management, the right operations. You control the levers and you make that engine work harder and pump it out what you need it to do.
It's property, but it's actually people, isn't it? If you can deal with people and you're good with people, and you know how to, that's it. It's people, isn't it, really?
Business is easy, people are hard.
That's it. Great to chat.
Great to chat, man.
Yeah.
Yep.
Thank you.
Cheers.